Good afternoon, folks. I'm Tommy O'Brien, coming to you live from TFNN, 3 p.m. Eastern Time, final hour of the trading day, and the volatility continues. And we've had two-way moves. The market's in the red, but boy, quite the rally to kick things off. S&P's intraday up 1% from the lows of 68.01 up to almost 68.70. We've backed off a bit, and right now you see the volatility off by 0.9% or 62 points in the red at 68.44. Now we had Google with their numbers last night. Remarkable CapEx. They get it all back. You opened at 306. Google down just $2. Okay, we get Amazon tonight. We'll get over to them in a moment. The NASDAQ 100 down to 24,543 earlier today. We're more than 1% off that number as well. We're up 340 points from that number. In fact, 24,780. You're still down by 220 points or 0.9%. Remarkable volatility. Markets were in a bit of a free fall this morning. Dow, you hit 48,918. Okay, we're just off that low, but you're negative by 0.8%, off 416 points in the Dow, and the Russell off by 1.2%. No real bounce in the Russell, as you see. Nothing like what we got in some of the other indices. Now, we jump over to Amazon. We have Amazon numbers after the bell. And, yeah, they're getting punished this morning and just chopping around near the open. Amazon down 4.1%, down almost $10 at $223. Take a look at this thing on a daily. And, yeah, right back to where we were, the lows of December. And you got lows out here from November and October hanging out near 215. We take a look at the weekly on this equity. Now, they've been underperforming. You're right back to where we were a year ago on Amazon shares. Take a look at the volume. So 90 days ago, a nice acceleration. We haven't got much going since then. Coming right back into that number, essentially. The low there was 222.75. We're at 223.50, within 75 cents. All right, we jump to yields. So as it's been a risk-off day, and they're selling equities, the hedge in yields is back on, as in yields, a nice hedge. You got higher price, lower yields. They're buying yields right now, and you get the 10-year, as I mentioned at the top of the hour, 4.21%, 4.21. And what does that have to do with? Jobs. So you get a report from Challenger today that says the most layoffs in the beginning of the year since 2009, the weakest hiring since 2009. We have jobless claims that come in above 230,000 for last week. And weak hiring and layoff plans paint a gloomy labor market. So, yeah, maybe we will get those hikes a little bit ahead. Hikes. Get that word out of my vocabulary, right? Maybe we will get those cuts. And more of them than the market is anticipating. We go over to the Fed fund futures. And, yeah, look how quickly this moves, okay? Yesterday, look at this. Yesterday, the odds that we were going to get a cut at the next meeting with Powell, March 18th, was 9%. Today, it's 25%, okay? You go to the April meeting. The odds we were going to get a cut at the April meeting yesterday were 23%. Today, they're 36%. Right? The odds that we get two cuts by the April meeting were 1.6% yesterday. Today, they're 5.6%. Okay? And then you go out to the first meeting with Warsh, which will be June 17th. Still only one cut priced in by then. But look at how even if you go to the odds that we get two cuts by then, 23% today. That was at 11% today. That's how quickly these yields are moving today. You got the 10-year at 4.21. We jump over the 2-year. And that is a move on the 2-year, man. Highly Fed dependent when you're talking about the 2-year, where the 2-year will be. Okay, and that's a move. You got higher price. You got lower yield. And even with lower yields, the dollar continues to catch a bounce. We're trading at 97.84 right now. So lower yields will weigh on the dollar, but not today. Okay, you got a bounce that's continuing on the heels of a new Fed chair that's been nominated, basically. Not yet officially, but yeah. And I guess the next discourse is going to take place about whether he makes it through Congress. You got powerful Republicans on the committees like Tom Tillis saying that it's not happening until this Powell deal's over and the hijinks going on there is over. And hopefully that does end so we can just move on, as is supposed to be the case to Powell. Excuse me, the Powell successor. And you had the Treasury Secretary in front of Congress today, in front of the Senate. And so Trump would decide whether to investigate the Fed pick wash or refusal to cut rates. And they're pressing the Treasury Secretary, of course, on the independence of the Fed and the investigation going on with Powell. And hopefully that does ease up. But one of the things they're talking about is whether it's like, anyway, to dig into it in terms of the Treasury Secretary saying the president's just joking when he's talking about suing Warsh. But the tough part about that, folks, okay, and the president can be a funny man, but it's not funny when, it'd be like a boss joking about firing a worker and being like, haha, I'm just kidding, I wouldn't do that. And meanwhile, they're firing the other guy left and right. And the other guy might get put in a box because it's a criminal violation. So the president is suing the government for $10 billion. And he said on an NBC interview last night that he's going to be the one that decides. Hopefully he just doesn't decide to sue the government for $10 billion and say pay himself from our taxpayer money. And hopefully he doesn't decide to sue Warsh. And if he's joking, that's great. But hopefully the criminal investigation of Powell goes away so the next Fed chair can jump in and we can have some normalcy. And I think that's what you're seeing. As you're seeing yields abate a bit, okay, we are going to move on to the next Fed chair. And let's hope that that just moves on, because that's what you're seeing. When everything happened with Powell, the 10-year spiked to 4.3%. We've eased now. We're at 4.21. You get a little dollar strength back into things, right? Metals paired some of the remarkable behavior they had going on. And that's a good thing on a longer-term basis, okay? Yields a little bit lower, right? Dollar strength not crashing. You can have a reasonable move lower in the dollar, folks, okay? I was talking to Teddy Kegstad yesterday morning. Great segment, as always. He made the great point. We are not in a dire situation, okay? Dollar weakness, that could be inflationary where you're talking about imports from abroad, but we're sitting at 97.84. A lot of the time, the last 25 years, we were weaker. We're coming right back, folks.